Every time gold flashes this signal, global markets collapse. And this time, the number is 10 trillion. The countdown to 2026 has already begun. Today, we reveal the $10 trillion gold movement that has predicted every major crash for the last 100 years, including the one experts say will strike in 2026. When we look back at history, we often remember the dramatic moments, the day markets crashed, the day banks failed, the day investors panicked. But the real story always begins long before the crisis. The warning signals don't come from politicians or bankers or the news. They come from something older, something more powerful, something humanity has relied on for 5,000 years: gold. Most people think gold is just a shiny metal, but in every financial crisis, gold behaved like a silent alarm system. And right now, that alarm isn't just ringing, it's exploding. In the last few years, gold hasn't just gone up. It has followed a very specific pattern. A pattern historians call the gold doubling signal. A pattern so rare that it has only appeared a handful of times in the last century. And every time it appeared, without exception, the global economy faced a devastating collapse within 12 to 24 months. In 1929, gold quietly doubled before the Great Depression. In the 1970s, gold doubled again before the oil crisis and the collapse of major currencies. In the late 1990s, gold doubled right before the dot-com crash, and in 2005-2007, gold doubled again before the 2008 financial meltdown. Not once, not twice, every single time. Now, gold has doubled again, and not just doubled, it has reached a level so extreme that analysts are calling it the $10 trillion gold signal, because the total value of the world's gold holdings has crossed the $10 trillion mark for the first time in human history. And historically, when the gold market becomes this oversized compared to global stock markets, it means investors around the world are preparing for something big, something dangerous, something they cannot say out loud. But why does this happen? Why does gold suddenly explode before a crisis? To understand that, we need to go deeper, far deeper, into how global markets actually work behind the scenes. For most of modern history, governments have controlled money. They set interest rates, they print currency, they bail out banks, they influence markets. But there is one thing they cannot control: fear. When the world senses danger, real danger, people instinctively rush to gold. Not because they want to get rich, but because they want to survive. Gold, unlike stocks or digital balances inside banks, cannot be hacked, frozen, erased, or inflated away. In 2020, the world watched as central banks printed trillions out of thin air. The global money supply expanded faster than any moment in history. But something unexpected happened. Gold demand didn't just rise, it surged. And not from retail buyers. Central banks themselves, especially in countries like China, India, Russia, Turkey, Kazakhstan, and Saudi Arabia, began absorbing gold at record-breaking levels. Why would central banks, the very institutions that control currencies, start hoarding gold like survivalists? Why would they spend billions buying a metal that earns no interest? Why would they accumulate gold at the fastest pace in 55 years? The answer is the same reason gold has reacted. Before every historical crash, they know something is coming, something that the average person cannot see yet, something that the financial system cannot prevent. By early 2024, the world's gold reserves had reached levels unseen since the 1950s Bretton Woods era. That is when experts first noticed the pattern repeating. Gold prices weren't just rising, they were doubling. And when gold doubles at the same speed that government debt skyrockets, it creates the exact economic pressure that preceded all previous collapses. The United States now carries over $34 trillion in national debt. Global debt has crossed $300 trillion, and interest payments alone are spiraling out of control. The financial system has become a balloon filled with hot air, and gold is the needle. Because when gold doubles, it signals that investors have lost faith in the financial system's ability to sustain itself. And now we come to the year that keeps showing up, 2026. Several historical cycles converge on this date. Debt cycles, commodity cycles, currency rotation cycles, yield curve inversion cycles, and now the gold doubling cycle, all pointing toward the same window. But the real mystery lies in the $10 trillion number. You see, gold has never represented this much wealth before. For most of history, gold sat quietly in the background. But today, it is becoming the backbone of a new financial realignment. Countries are shifting away from the dollar. New alliances are forming. Digital currencies backed by gold are being discussed behind closed doors, and the world's largest economies are preparing for turbulence. Trillions of dollars have silently moved out of traditional markets and into safe havens. Sovereign wealth funds are reallocating assets. High net worth individuals are withdrawing from banks and moving into physical gold. This isn't normal behavior. This is preparation. Because the last time gold became this aggressively purchased, the world faced a crisis so severe that it changed the course of history. And now, the $10 trillion signal suggests that the next crisis, the one economists fear, could be even larger. Imagine what happens when stock markets go 40, 50, even 80%. Imagine what happens when credit freezes, when banks face liquidity shortages, when currencies depreciate rapidly, when governments scramble to stabilize the economy but find they are already too late. This may sound extreme, but it is exactly what happened in every previous cycle. The difference now is scale. The world is more interconnected, more leveraged, more fragile. A single shock could trigger a chain reaction across markets, stocks, bonds, housing, commodities, currency markets, all connected like dominoes. But the real question viewers ask is this: why 2026? Why not 2024 or 2025? Because financial cycles typically lag behind gold signals by 18 to 24 months. That is the historical average. When gold doubles, markets don't crash instantly. They enter a hidden phase, a phase where economic damage is building beneath the surface, unnoticed by the public, unreported by the media, unacknowledged by politicians. It's like a time bomb already ticking, but nobody hears it. And now, the clock is running out. The $10 trillion gold signal has never been wrong. Not in 1929, not in 1973, not in 2000, not in 2008. And now it's flashing again. Whether 2026 becomes another year of crisis or a turning point in history depends not on governments, not on central banks, but on how prepared you are. History doesn't repeat, but it rhymes. And gold is singing the same song as every major crash before it. The question is, are we listening?